Live from London is John Fox, China analyst at the European Council on Foreign Relations. So in the past, the focus has been very much on the US consumer, but are things changing? Is the Chinese trade surplus now the engine for world economic growth?
It has been for a couple of years, and I think that is the future that we're looking at. I think what you're seeing here really is simply a savvy economic buyer. China, as your report said, has about $2 trillion worth of reserves stacked up, and even before this economic crisis really started, about 2 or 3 years ago, it was already putting in place the institutions and the structures to start making these sorts of investments. So I think China is finding itself with a very strong hand at a time when a lot of companies are desperately in need of its investment, and it's doing what any savvy investor would do, taking advantage of these rock-bottom prices.
What does that mean then for China and world economic growth as well? What is the significance of this aggressive approach that we're seeing from China to buy up commodities like oil, etc.?
Well, what I think it means is that we collectively need to have a dialogue with China about the best use of its investments. That is something which certainly Gordon Brown was doing here in London when Premier Wen Jiabao visited in January, February, and it's something which is the top of his agenda for the hosting of the G20 summit on the 2nd of April here. And what he wants is China really to not just be making these investments bilaterally on a sort of company-to-company basis, but actually to start doing this at a multilateral level, in particular through the IMF, the International Monetary Fund, where he and other leaders want to see China using those $2 trillion of reserve to really help the global effort to drive growth and to turn around the economic crisis into recovery.
But is that going to be enough to accelerate world economic growth?
Not on its own, no. I mean, China is no silver bullet, and it can't single-handedly pull us out of this. I think you've all seen the reports in terms of the challenge that China domestically has to face. It needs to create huge amounts of jobs, and is therefore spending its own reserves also on domestic infrastructure and creating employment locally in China. So no, I mean, China is not simply sitting there immune from all of this crisis and able to help us out. But I think what I would say is that China is sitting on the largest amount of foreign reserves ever held, and it so far hasn't put them to much use. They are held in treasury bonds, largely in US securities, but they are not being invested in certainly the sort of proactive way that global leaders want China to see doing so in the future.
John Fox, thanks very much for your analysis.